Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about INSTEEL Industries INC annual report. And INSTEEL Industries Inc. offers a range of steel wire reinforcing products for concrete construction applications. The company's main products include prestressed concrete strand, PC strand, for imparting compression forces into precast concrete elements, welded wire reinforcement, WWR products including plus engineered structural mesh for primary reinforcement in concrete structures, plus concrete pipe reinforcement for primary reinforcement in drainage and sewage systems, plus standard welded wire reinforcement for crack control applications in residential and light non-residential construction. These products are sold to manufacturers of concrete products, rebar fabricators, distributors, and contractors through a network of sales representatives. INSTEEL Industries Inc. has seen its stock price rise by 14.89% in the past year due to a combination of strong quarterly earnings, significant revenue growth, strategic acquisitions, and an optimistic outlook for certain construction markets. The company's fiscal year 2025 performance was marked by robust results, with net sales increasing by 22.4% and net earnings nearly doubling to $41 million. The third quarter saw a notable increase in net earnings, surpassing market expectations, while the second quarter showed improved demand in construction end markets. Strategic acquisitions, including Engineered Wire Products and O'Brien Wire Products of Texas, have strengthened INSTEEL's market position, and a special cash dividend was paid to shareholders. The company has also benefited from robust demand in non-residential construction markets and infrastructure spending, with analysts projecting an 11.5% annual revenue growth over the next 3 years. While some individual quarterly reports showed mixed results, the overall trend of strong financial performance and strategic growth has driven INSTEEL Industries Inc.'s stock price increase over the past year. The primary drivers of revenue growth or decline can be summarized into 3 main categories. Revenue growth is primarily driven by non-residential construction, incremental volume from acquisitions, improved demand in construction end markets, and pricing actions implemented across all product lines. Additionally, strong market conditions, particularly in public non-residential construction, and ongoing federal investment under the Infrastructure Investment and Jobs Act have also contributed to revenue growth. On the other hand, revenue decline is primarily driven by lower average unit costs, lower average selling prices, weak market demand, and competitive pressures. Furthermore, a decrease in inventories and reduction in accounts receivable have also led to revenue decline. The impact of OBP acquisition and EWP acquisition on revenue remains unclear or unquantifiable due to the lack of specific data provided. Net income and profit margins experienced significant fluctuations in the given fiscal years. Initially, net income increased by 111% to $41 million in fiscal 2025 due to various factors such as lower average unit costs and selling prices. However, this trend reversed on page 18, stating a decrease in net income from $58.2 million in 2024 to $27.2 million in 2025. Profit margins followed a similar pattern. They increased in fiscal 2024 due to cost efficiencies, but decreased in fiscal 2025 due to higher raw material purchases and unit costs. The expected decline in profit margins is attributed to rising costs outpacing realized price increases, particularly in weaker market environments. The reasons behind these changes are multifaceted. Increased wire rod costs, reduced selling prices, inadequate raw material supplies, and tariffs on steel and aluminum products contributed to the decline in net income and profit margins. Additionally, factors such as increasing labor, medical, and workers' compensation costs, rising transportation costs, potential negative impacts from global economic conditions and tariffs, inflationary trends, and climate change risks affecting raw materials, commodities, energy, and facilities further exacerbated these changes. The company's financial performance indicates a consistent generation of positive operating cash flow. The data from 2024 and 2025 shows that the company has been able to generate significant amounts of cash from its operating activities, with $58.2 million in 2024 and $27.2 million in 2025. Furthermore, the company's financial statements explicitly state that its operating cash flow is positive, reinforcing this conclusion. The company's debt level has undergone significant changes. The credit facility was amended to extend the maturity date from May 15 2024 to March 15, 2028, indicating a longer repayment period. Additionally, there were no borrowings outstanding on a $1 million revolving credit facility as of September 27, 2025. The company's interest expenses have also changed significantly. Interest income decreased by $3.4 million due to lower average cash balances and interest rates. The interest rate change from London Interbank, offered rate to secured overnight financing rate, may also impact future interest expenses. Management is cautiously optimistic about the company's outlook for fiscal 2026. They expect a strong start to the year with majority of firm orders shipped in Cone, driven by seasonal demand and cyclical construction activity. The company's competitive position has been strengthened through recent acquisitions, particularly in the Texas market. However, management acknowledges potential risks such as fluctuating cash flows due to seasonal factors and cybersecurity threats. They also highlight their commitment to safety, employee development, and environmental compliance. Overall, management is confident in the company's ability to compete due to its strong market position, broad product offering, and technological advancements. With operational improvements and recent acquisitions driving momentum, the company is well-positioned for success in fiscal 2026. Acquisitions and divestitures overview. In the past 2 years, our company has undergone significant changes through strategic acquisitions and divestitures. Notably, we acquired Engineered Wire Products, Inc. (EWP) for $67 million in October 2024, expanding our product offerings and capabilities. Additionally, O'Brien Wire Products of Texas, Inc. (OWP) was acquired for $5.1 million in November 2024. On the other hand, we have also divested certain assets through mergers with other companies. Notably, Florida Wire and Cable, Inc. was merged into INSTEEL Wire Products Company in 2002, marking a significant shift in our business operations. The company has a history of returning value to its shareholders through both dividend payments and share buybacks. Specifically, it has paid regular quarterly cash dividends, as well as a special one-time dividend, and has also authorized the repurchase of common stock. These actions demonstrate the company's commitment to rewarding its investors and managing its capital effectively. Concerns about inventory buildup and supply chain disruption are evident in several areas. Seasonal fluctuations in demand can impact inventory levels, page 4, while volatility in raw material costs and availability may disrupt supply chains, page 7. Uncertainty surrounding market responses to supply constraints, trade policies, and tariffs also poses a risk, page 8. Furthermore, concerns about raw material availability and commodity price fluctuations may hinder cost recovery, page 20. Additionally, restructuring charges due to equipment relocation through 2026 suggest potential supply chain disruptions, page 33. That concludes the financial summary for INSTEEL Industries INC. Feel free to comment below, and I will be happy to answer them when possible.